Hello, everyone, and welcome back to the J22 report. I'm your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. Just do a little disclaimer. Nothing in this video should be conceived as financial advice. Just my thoughts on the market, and that's all. Can't guarantee performance or outcome. So, anyway, let's go into just the weekend stuff. I decided to do a video. I didn't really have much to do. So I was reading and just doing some weekend reading and found some interesting stuff. And here's the first thing I found right here: data analysis. Unbooked losses at banks spike in the first quarter of the year. So more losses are coming on the banks. And here it is: more banks reported unbooked losses over at the last half of their capital equity in response to spiking interest rates placing pressure on the financial system. What do you think the Fed is now all of a sudden talking about rate cuts? Certainly not the economy. So look at this: 50 banks saw unrealized losses on their investment security portfolios exceed at least 50% of their capital equity in the first quarter of 2024. Slight uptick from 2023. Overall aggregate unbooked losses at banks across the country rose to 517 billion at the end of the first quarter 2024, up from 487 billion. And let's see, the bank that got shut down, Republic, had the most exposed unrealized losses. That's obvious. And then Florida Banking Initiative, Florida exposure to unrealized losses, used most recently available from quarterly call reports, blah, blah, blah. So basically, this data set includes financial information on 4,697 banks. Banks focusing on banks more than 1 billion in assets, or 997 banks, to calculate unrealized losses on investment securities. I'm sure these are all bonds too. They're probably well, they could be stocks. Who knows? If you look at it, only 6 or 7 stocks are carrying the market, so they could have a lot of equity exposure. This metric identifies that the banks that were most at risk from their exposure. In most cases, a bank that lost half of its CET1 capital would be forced by regulators to take remedial actions, such as raising new capital or seeking a merger partner. In the worst cases, such banks would be face closure by FDIC. So there it is. Rising rates would have a negative effect on balance sheets of many banks regarding their unbooked losses. So yeah, that's the other thing. It's likely losses in the second quarter could be far greater as the yield on the 10-year treasury note rose from 4.21% at the end of the to 4.88% most recently. There are also many smaller banks with less than 1 billion assets facing similar risks. 22 have unbooked losses greater than 100% of their equity capital, and 275 have losses greater than 50%. So, as you can see, a lot of problems with the banking system. And I think next year it's going to even be worse because there's going to be a lot of defaults on commercial real estate loans. And this is what I worry about. And this is one reason, I have a Rumble channel. If you haven't followed me on Rumble, go do so. Same thing, the J22 report, it's right there. Just type it in. And this is what, well, there's a lot of things that worry me, but the financially speaking, of course, they just can't get rid of. They always have to have these. So, anyway, censorship addicts. Democrats seek to squelch speech on banks. And this is what worries me is I do worry that one day they will the talking about the economy will be considered hate speech. Not in the manner that they want, meaning the economy's great, this is overblown. You'll be able to talk about that all you want, but if you tell the truth about the days of America being on top are done and the economy is going to tank and it's going to stay down. The stock market's not just going to go down, it's going to stay down. As it goes down, they are going to YouTube the big tech. They might just ban you from. So I will, in the future, be hoping to go to Substack. I do have a Substack account. I haven't gone public with it yet. I'm trying to work out those details, but please do. I will announce it. So, but if you haven't followed me on Rumble, follow me there. I will looking to expand to other more free speech. Maybe I'll go to Twitter soon. But that's one of the big ones. Even though Musk is not bad, he's very good. But anyway, concerned about your money after recent bank failures, you might want to keep those thoughts to yourself. While some rush to get their money after the collapse, at least one leading Democrat is pushing for censorship of those who do not have faith in the banking industry. So I don't want to be too political, so I don't want to. I'm going to skip more. So let's see. We're more. So anyway, now Senator Mark Kelly has put bank solvency on that list. It is only one of the it is only the latest example of censorship slippery slope. Kelly shows how censorship is addictive. It not only builds an increasing tolerance, but decreasing tolerance for opposing views. So in a Zoom call this week, Kelly asked representatives from the Federal Reserve, Treasury Department, and FDIC about censoring social media to remove those raising doubts over bank solvency in the wake of Silicon Valley and signature clauses. So there they are. Rep. Thomas Massey confirmed Kelly suggested that the government should work with social media companies to censor information that could lead to a run on banks. So there you go. Yeah, they believe that the problem with '08 is they did not censor people who talked about it. So anyway, that is very scary. And here's the other thing, just to show how bad the economy is. This explains one of the reasons, even though mortgages are fixed, people cannot uh, are still able to pay their mortgage. So by now, 27% of Americans say they skip meals due to rising food costs. July 6th, so 2024. So this is new. It's from Gateway Pundit. 27% of Americans may say they skip meals due to rising cost of food. 39% say they skip meals to make house payments. Pretty soon, it's going to be either default in your house and you get to eat, or you don't eat, but you get to keep your house. You need to eat to live. You don't need a house to live, technically. So, yeah. 39% of Americans say they've skipped meals to make housing payments. Among millennials, that figure rose to 44%. Among baby boomers, it was 20%. So Gen X, 41%. Gen Z, 37%. So housing affordability is at all-time low. In, in November, nationwide households need six-figure incomes comfortably for the typical home sale. Last month, nation home buyers need to make about $107,000 a year annually, up from $74,000. In the Philadelphia metropolitan area, annual income needed to afford a home at a medium sale price of 260 grand was about 70,000, up from 50,620 in 2021. So yeah, you look at it, Americans to make mortgage payments, they are skipping meals. They're just basically not eating. And to show how poor, I came across this article. I'm gonna share one more thing with you. And I was like, laid off from a nearly six-figure job. This 61-year-old has been driving for delivery apps and says, I don't get a day off. So here it is. Uh, so shuttling orders on Shipt and Instacart, earning about 50,000 before taxes. She expects that the rise of about to rise to about 75,000 annually if she makes it through the hiring process for 9/11 dispatcher role she's pursuing before she lost her PR job. She made close to 100K a year annually. So there you go, 3 bedroom, 2 bathroom, which she owns. Monthly home ownership totally 2,900. Buys a fixed rate mortgage. Said her life could be worse, but it isn't great right now. So yeah, you think consumer spending is gonna rise under this environment? I don't think so. Gig workers continue to gain popularity as cost of living remains high. Bank of America found that nearly 70 million customers who received income from gig hit 3.8%, surpassing previous peak of 2022. So look at this. Here's the other thing. This is one reason people undefaulted. Melvin said she had to put off needed medical procedures and repairs to her home because of tight household finances. Eventually, they can't afford upkeep of a house and they just sell it. So, my fence is piecemeal together after several tropical storms and hurricanes taken tolls over the years. And because she doesn't have health insurance, she hasn't seen the doctor and dentist in some time. I don't have extra money to get things done that I need to get done. For the first time, she's delayed paying federal income tax she owes this year. She figures she may eventually have to dip into her savings to do so, even though she hoped to reserve those funds for mortgage payments. So yeah, eventually they might sell the house. And this is why inventory will explode. These people can't afford homes. They're trying to hold on to it, but eventually they're just going to say, I can't keep up with this. I need to sell. I've been able to make survival money over the past 4 years, almost all doing this, but it's been tough. Because of the base pay she's guaranteed isn't enough to live on, but relies heavily on gratuities. So, so yeah, here, and of course, this person can't find a job or a salary job. And this is one of the reasons the job numbers are BS. Yeah. In the jobs report, it doesn't show a net job loss. This person lost a PR job that paid six figures, but since she got a gig job, all jobs count the same. So lose a good full-time job with benefits, create two gig jobs that pay $8 an hour or 15, then they count that as a job created. So they count all jobs as the same. But eventually it'll start showing up in a lot of the data. So anyway, these are just stuff I did for the immediate for today. Hit that like button, subscribe, and just remember the disclaimer below. No financial advice, just my thoughts. So, and yeah, if you look at this, this is why the markets eventually housing equity is going to crash. Don't know exactly when, but it will come probably this decade. Anyway, hit that like button, subscribe, and I'll see you next video.